Hey family, this is Timalyn Bowens, America's favorite EA, and today I am going to be going over the most requested form that I get each year, how to fill out a W-4 for a family that is filing as married, filing jointly. Okay, and I also want to point out that everything I talk about in this video is also going to apply to somebody that is a qualifying surviving spouse. This is typically a taxpayer who was married, but their spouse is now deceased, but they still have a dependent in their home. So for the year of, I believe, 2 years, they can still use the qualifying surviving spouse status. Okay. So this is for the tax year 2024. Keep that in mind because some things may be adjusted in future tax years. So for today's example, we have Philip Z. Banks. All right. And we have first, middle initial, last name, and then social. So we have the 949009251. Now, with this, when you're filling out step one, you want to make sure that you have your name the way it shows up on your social security card and the way that it shows on your last tax return. We don't use nicknames here, right? Because this is the information that they're going to use to create your W-2 come next tax season. All right. With the address, we have 251 North Bristol, City, Los Angeles, California, 90049. Okay. So with the status, because we know that Uncle Phil is married, he's going to be filing as jointly with Aunt Viv. We're going to check this box right here for married filing jointly. Okay. And in this first example, we are going to say that Uncle Phil and Aunt Viv are empty nesters. Aunt Viv is not working for money outside of the home. So we're going to skip 3. We're going to skip step 4. Uncle Phil would sign this and turn it in. All right. So if you are married filing jointly, your spouse does not have an income, and you don't have any dependents, you're just going to fill out this top part, sign, date, and turn it into HR. But let's mix it up a little bit, okay? Let's say that, again, in this example, no dependents. Uncle Phil and Aunt Viv, they, in addition to having his income as a lawyer, they also know that they're going to be receiving a lot of interest and dividends from their checking accounts and different things they've invested in. If that's you, so you typically get dividends from a Fidelity statement or Charles Schwab, whoever you may use as your broker, you can do an estimate of how much you think that you're going to make throughout the year. So let's say you think you're going to make 2,500 in interest and dividends. If you put that number here, what this tells HR to do, or the payroll company, is that in addition to withholding for your salary, you also want to factor in an additional 2,500 and then sign and date. Okay. But let's look at this from the standpoint of the actual Banks family, right? So again, we have Philip Z. Banks, and if you know what Z stands for, you probably know my favorite episode of the show. Go ahead and put what Uncle Phil's middle name is in the comments. So we have all of this information. We're not going to use the estimator at irs.gov slash W4 app. You can use that to get a more exact number of what should be withheld. In this example, we're not going to do multiple jobs. Instead, we're going to add their dependents. Okay. So when the show first starts, we have Hillary, who's the oldest teenager. We have Carlton, we have Ashley, and then we have Will who moved in. So I don't believe that Will and Carlton had their driver's license yet, but let's just assume they're 16 and that Hillary is 17. Okay. So in this example, if we have Will, 16, Carlton, 16, and then we have Ashley, we have 3 qualifying children who are going to be under the age of 17. And for this example, let's say that Uncle Phil makes less than $400,000, okay? With that being said, we're going to take the number of dependents under 17. So that's going to be 3 because we have Will, Carlton, and Ashley. And we're going to multiply that by 2,000. So that's going to give us $6,000 right here. Okay. Then we know that we have Hillary, who is, just for this example, let's say 17. So here we have 500. Now, the reason for this is the children under the age of 17 are going to qualify for the full child tax credit, which as of right now is $2,000 each child. So that's why we multiply the 2,000 by 3. That's $6,000. Because Hillary is a dependent but not a qualifying child for that credit, she is only eligible for the other dependent credit, which is a drop down of $1,500 from the child tax credit. So that's why we have the 500 here. In total, that's going to be $6,500. Now, keep this in mind. If you have dependents and you add them to your W-4, yes, you will get a bigger direct deposit, paycheck, however you receive your payment. Because what is going to happen is now this $6,500, Uncle Phil's employer is going to divide by the remaining amount of pay periods and give him in his check. Excuse me. But also remember that if he's getting that $6,500 in his check, that means that his refund at the end of the year is going to be $6,500 less. Now, if he typically only gets a $3,000 refund, what does that mean? Well, if we subtract that, that means this year, Uncle Phil is going to actually owe $3,500. Okay, so just take that into consideration when you're planning and adding your children. So with that example, Uncle Phil would sign, date, we're done. Okay. Now his is pretty straightforward because with Uncle Phil, we're just going to assume Aunt Viv, she has her organization she works with, but she's not earning a paycheck. If you work with a spouse that does earn a paycheck and you're filling out this section, you want to make sure that both of you don't claim the same dependents, because when you file your tax return and you're married filing jointly, you only get a $2,000 child tax credit combined, not for each of you. So if Uncle Phil was claiming Will and Aunt Viv was claiming Will, that means he's having $2,000 less withheld and she is also, which will also result in them owing. So what I would advise in that situation, if you have multiple children, maybe let's say you have 2, each of you is going to claim 2 children. Let's say that in your situation, you have 4, like the Banks family did in the first season. Well, then we would give Hillary and Will to Uncle Phil, and then we'd give Ashley and Carlton to Aunt Viv. So when we combine the return, the income on the return, we're still going to have 4 dependents total, and the withholding will stay correct. So let's look at another example. We have Uncle Phil, all of his information is here and looks good. Married filing jointly. When we get down here, let's say that now we have little Nikki, right? And Carlton and Will are over the age of 17. With that into consideration, Uncle Phil is going to put Will, Hillary, and Carlton on his W-4. They're all over 17 now, okay? So that's $1,500. Oops. Aunt Viv is going to put Ashley and Nikki on her W-4. But wait, if we have that income, that's going to be the interest, dividends, the capital gains from selling stock, we can opt in to have money withheld for that if we have an estimate of how much we'll make there. Also, if we know that we are going to be itemizing, we can factor that in because when we look at the W-4, we have to take into consideration the standard deduction, which for 2024, married filing jointly, the first $29,200 of combined income is not going to be taxed. Okay. So if you were making around $30,000 and you're like, oh my goodness, they're not withholding anything, that's because they're taking the standard deduction into consideration. Okay. Same thing if you have maybe you're making around $60,000, you feel like they aren't withholding anything, but you also have three dependents on there. They're taking into consideration the standard deduction and your child tax credit. Okay. But for Uncle Phil, we know he has that huge mansion, so he's definitely paying mortgage interest, right? He's definitely also giving to different charities, and he's definitely paying state and local taxes because they're in California, right? So for state and local taxes, he's going to hit the max, which is 10,000. And then let's also say that he gives 50,000 in charitable contributions and he pays 20,000 in mortgage interest. So the 20 plus the 50 is going to be 70, plus this 10 is going to be 80. So when we go up here, we would put the $80,000 in itemized deductions right here. Now, what this is going to do when you put in your itemized deductions, it is going to have them withhold even less because what you're telling payroll and HR is that, hey, I'm going to be able to deduct $80,000 of this income due to my itemized deductions. And remember, with the child tax credit, it's going to knock out your liability dollar for dollar, which could turn into you getting $1,500 back. With a deduction, it is only reducing the amount of money that you are actually taxed on. So, in this example, Uncle Phil, married filing jointly, that box is checked. He is claiming Hillary, Will, Carlton right here. So he has the $1,500 of a credit. They're going to be itemizing. So he has the 80,000 here. And it's very important again, just like up above where I said you don't want to claim the same children. We would not want Aunt Viv to have this as well, or else they are going to have too little withheld. So Uncle Phil has it. He's going to sign it, date it, turn it into HR. One last example, folks, and then I will let you take it from here. So we still have married filing jointly. Let's say Uncle Phil, he picks up a second job just because he's bored, right? It's a little part-time job, nothing too major. Aunt Viv is not working outside of the home for wages. So we have, let me take this out. We still have Hillary, Carlton, and Will here for the $1,500 because they're all over the age of 16. But then we're going to have little Nikki and Ashley. So that's two dependents times the 2,000, which is how we get the 4,000. Again, Hillary, Will, Carlton, so that's 3 times this 500. That is going to be a $5,500 credit. But now Uncle Phil has two different streams of income, right? So in order to make sure that he has enough withheld, he's going to have to elect to have extra withholding. And this is the trick that trips up a lot of couples that are doing married filing jointly. Because you see, with that standard deduction being roughly 29,000, your spouse's employer is taking into consideration the money they're making, but not the money that you were making. So in order for everything to work out right, we have to have a little bit extra withheld. For some people, it's a little, for some people, it's not. For Uncle Phil, it's probably not going to be what we would consider a little. So when we get to this chart, we want to make sure that we're using the right one. Because see, at the top, we have married filing jointly or qualifying surviving spouse. Here is single or married filing separately, and here is head of household. If you need either one of those, I've already done videos covering that this year. So for Uncle Phil's first job, let's be modest here because we need to keep him under 400,000 for this example. Let's say that Uncle Phil is making 300,000 at his main job, okay? And then at his side job, he's making 50. You may be thinking, what kind of side job pays you 50? Well, remember, he is an esteemed lawyer. He's also been a judge, so he can find a side job that pays him 50. All right. So this is why we learn algebra, folks, to learn how to fill out our W-4. We find the higher paying salary here, then we find where it intersects with the lower paying salary. So we have $10,990. Okay. So let's say there are 10 pay periods left in the year. So of course, if there are 10, we need to divide this, all right, by the amount of pay periods that are left to figure out what his additional withholding should be each check. To divide this by 10, we're just going to move the decimal place over, and the additional amount that needs to be withheld is $1,099. Now, for you, if you're watching this in March, you've probably been paid at least 6 times already. And there are typically 26 pay periods in the year if you get paid every other week. So for you, you would need to divide this number by 20. Okay, so keep that into consideration. Wherever we are at in the calendar year, you want to take however many pay periods you have left in this year and divide the number that you find by that amount of pay periods. I'm using 10 to keep numbers easy. All right. So again, $10,990. I'm going to divide this by 10 to get 1,099. And I'm going to put that 1,099 right here because that's how much Uncle Phil needs withheld extra to make sure that he's not going to owe at the end of the year, right? Then he's going to sign and date it. Now, take this into consideration as well. With this extra withholding, most people typically have that withheld from the highest paying job. However, you don't have to. As a matter of fact, you don't even have to have it all withheld from one job. If Uncle Phil wanted, he could split this in half and have half of it withheld from his side job and half of it withheld from his main job. He could have 70% withheld from his highest paying job and 30% from the other job. The IRS doesn't care just as long as the sum ends up being this 1,099. The same thing with you and your spouse. If you are working 2 jobs, divide it up between the two how you so desire. If you have one job and your spouse has one job, you all divide that up however you desire. All right. So I hope this was informative. I tried to cover all of the examples that were requested from the different questions and everything. If you have any comments, feedback, or questions, let me know down in the comments. Thank you so much for requesting this video. And don't forget, if you know Uncle Phil's middle name, let me know that in the comments as well.